into a miner. So miners are participating in making the blockchain work for Bitcoin. And as transactions are being put on the blockchain, their computers are validating those transactions. And I'm not quite sure exactly how the Bitcoins are awarded, but the bigger miners have a big advantage on getting awarded the Bitcoin, that you get awarded because you're providing the support to the network. Ethereum is a different model, but that's essentially what we're dealing with. And this right here, what we're seeing is this is a lot of infrastructure that is participating in the whole Bitcoin blockchain process. And the term mining is they're getting awarded Bitcoin for providing the infrastructure. Now, let's take a look at the fundamentals of this company and see if it'd be a good investment. And I also want to look at their financials, because I have seen when I looked at miners, I would say that we're going to look at their KPIs. And I've noticed that, so here's a presentation. I want to see your financials. Just show me your financials. Presentation transcript. Okay, I'm going to open up the presentation, but then hopefully they give me their 10Q. Yeah, it's right here. So I've seen with some miners that generally accepted accounting principles, GAAP, is the accounting boards want people to conform to certain ways of reporting their financials. And it's a good idea. That way, if you're looking at Home Depot and Lowe's, right? That's a simple example. The financials should look the same and the businesses are similar. Yet when the standards boards, these are concepts that are like 100 years old, accounting concepts, and they get updated. But I would say there's an appreciation for keeping things the same in accounting, because you want to be able to compare to history. And the Bitcoin industry is so darn new that it forces Bitcoin miners to classify some revenues and even on their balance sheet, some assets in a way that it doesn't look like, the value doesn't come out very easily. Or I should say, reading the value of a company makes it is harder. And hopefully we'll see an example of that here. All right, so we have a 10K, and yeah, 10K is good. Okay, so CleanSpark. I'm going to go with CleanSpark. That's CLSK. Now, I like stock analysis because it gives me a nice place to kind of start and kind of do a nice overview. Revenue growth is phenomenal. Now, what helps is you got Bitcoin that's really going up in value, which is very good. But phenomenal growth is phenomenal growth. So this is the revenue, grown really nice. Cost of revenue, electricity, GPUs. I'm sure they have to depreciate those GPUs. And you have your gross profit. So their gross margin is 56%. It's very good. You can see it might vary year to year. And depending on how good they are at mining Bitcoin and then the price of the Bitcoin itself. But really, it's been good for 4 or 5 years. So it's been doing quite well. So gross margins, so they're losing money. Then the free cash flow, that's where I'm going to look at the financials, because I'm actually going to examine that and see if it's truly negative free cash flow, or are the accounting standards not giving them credit for Bitcoin. We'll get to that later. So remember that, 299 negative cash. But I'm curious to see why these guys are losing money. So you have, so their fiscal year ended September 30th. Okay. And revenue 378, gross profit 213, selling, operating expenses. Excluding unusual items. So we'll have to look at that. And then an asset write down. Okay. This is a non-cash event. If Bitcoin went down in value, then they'd have to write it down. If they were holding Bitcoin and it went down in value. There's a principle in accounting called conservatism, meaning if there's two options on the table, you'll always take the conservative one. You'll never take the optimistic one. So if you have a write down, you're going to write it down. You're never going to write it up. So keep that in mind, that these write downs are non-cash. And, as we've seen with Bitcoin, it's risen. So it may have been a quarter where you saw Bitcoin drop, but now it's risen. So it's almost like we need to undo that number to really get a clear understanding of the performance of the company. So I'm not concerned about this loss, because as you can see, the Bitcoin industry is a new animal that our accounting standards can't keep up with. Now let's go examine the financials and see if I could show a few examples of what I'm talking about. Okay, so here's your balance sheet. They have cash, and this is US dollars of 121 million because it's in thousands. Okay. We have Bitcoin, 431. So we are, and I'm going to note a few things on some paper here next to me. So we have CleanSpark. So we have 121 and then 431. See, I consider Bitcoin, this is cash to me, right? These guys can convert this to cash immediately. So that's cash to me. But I think some reporting standards will not allow the financials to show that. Okay. Okay, that's fine. And let's look for debt. So they owe $7 million and then 58. So this is cash, debt. So they have about so have about $553 million of cash, and they have about 65, call it $66 million of debt. So their net cash position is about $490 million if you just consider the cash they have minus the debt. Okay. So here's their Bitcoin mining revenue. Looks good. This is for the year ended. Big jump from 2023. Okay. Cost of revenues. And here it is. So this is a gain or a loss on Bitcoin. And they're having to take a decrement against the revenue for Bitcoin having this volatility. In my mind, that needs to be undone because, yeah, it went down, but then it came back up. Impairment expense, fixed assets. I don't know what that is. The fixed assets. That could be that a batch of GPUs went bad and they had to like throw them away. I'm not sure what that is. But I could see that they're closer to profitability than the financial statement would lead us to believe. Okay, point made there. Now let's get to cash flow. Okay, so they have this net loss, but of course, see, this is where we undo it, this gain. And then Bitcoin mining revenue. So Bitcoin mining revenue. This needs to be undone because the reason it's being reversed is they're being paid in Bitcoin. I treat Bitcoin as cash. So this is a positive 378. Okay. So I actually think, and let me make sure there's select the impairment fee. That makes sense. Depreciation. That makes sense. That makes sense. So I'd actually take 378 and add it to this negative 233 to get my true cash produced in this period. And that's what I wanted to point out about miners is accounting standards force them to not treat Bitcoin as cash. I treat it as cash. I own Bitcoin. I know what it's all about. You can turn it into cash immediately. It's even better than cash in a lot of ways. You can move it much faster with less friction. So that's how I treat it. And that's how I value miners. So I'm going old school. I am doing arithmetic on paper. That's how I was taught arithmetic. 145 million in cash from operations. And that would be for the year ended. Okay. Now let's see, where's the CapEx? So that was, there's no CapEx. Okay. So there's no CapEx. So it's $145.8 million of free cash flow. So what's the market cap of this company? So this is a $3 billion company that is producing free cash flow in my book of $145.8 million, if you include Bitcoin. They are growing. They are on a rocket ship ride. They are on a rocket ship ride sitting next to Michael Saylor drinking Red Bulls, saying, man, we got to stay up all night for 3 weeks to keep up with this demand. And so this one here, man, this is exciting. Analysts think it's 103% discounted. 7 analysts cover it. They're going to make money in the fiscal year that they're already in of $1.34, $1.94, and then 87 cents 2-3 years from now. They're going to grow nicely. The super growth is going to kind of slow down. And this is going to be dictated by Bitcoin prices, right? If the Bitcoin is being sold for $200,000 in a year or 2 years, these numbers will be restated higher. So overall, this is an interesting business. And let me check the comments. Maybe we can jump in and do an analysis on this company. You guys liking what I'm talking about and the level of depth I'm going into? I got Uber on the wings here, or on the wait list. I think I can bang it out like in 10 minutes, so I might keep going, but give me a second. So Neil, you like Mara? That's another miner. Very good. Yep. It looks good. Okay. So there's Mara and then Riot. Okay. So Marathon, I believe, and then Riot. Now, every time I look at these, and it's been a while since I've looked at Riot, but let's look at CleanSpark. And I'm going to try to fly through an evaluation and kind of guess at what I think the valuation for me would be for the company and see if it truly is discounted. So I have BTBT. It's been a stock that I've liked covering. I've been in and out of it. I'm currently out, but I currently invest in Bitcoin, Ethereum, Coinbase, and okay, so row. CLSK. So you see the discount that I'm using on Bitcoin miners, a much higher discount. Now these guys, I don't know them that well, so I'm going to go with that. Now I just said that my free cash flow number is 145. Now Bitcoin, I expect is going to keep going up. We how am I going to grow the first 4 years? I'm going to grow at 10%. I'm not going to be overly nuts about it. So it's plus 145. It's 160. So if they grow their cash flows by 10%, which is a very conservative rate, I mean, they're growing their revenues. So maybe we go 25%. Okay. Then we get to intrinsic value of 3.3 billion. They had 552 million of cash if I include the Bitcoin, and they had 66 million of debt. Their market cap is Market cap is 312. And shares outstanding 292.56. Okay. So it's discounted, not a wild discount. And I mean, these numbers are really, this is like, when you look at like a really old company, a value stock, it's like trying to hit a moving train with a baseball, so to speak. Maybe it's going 40 miles an hour and you're trying to hit one particular train car. But with a fast growing business, it's like, whoa, it's like an airplane flying by and you're trying to hit it with the same baseball. It makes it much harder. All right. So forecast on their earnings per share. It's cool that there's 7 analysts covering it. It's going to be $1.34 for the current year. It's a good number. Keep that at that number. And what was the growth going to be on 34? It's going to grow at 44%. So I'm going to grow it at 20%. Yeah, so that earnings per share is going to make this stock look special, especially if Bitcoin rallies. And this is a 12% discount. So I mean, I'm seeing a lot of potential there. Investing in Bitcoin, next generation stuff is very risky, but I invested $70,000 into my Bitcoin and Ethereum, and it's worth $200,000 now. So there's a big return. Coinbase has been a really good returning stock for me. And CleanSpark could be a big winner, but it's very risky. And those are the numbers that I kind of threw together here on this session. I'm going to refine these numbers. I'm going to give myself a note to come back and review these. But that's CleanSpark, man.